Let's talk about VA Tech WABAG. They have secured a repeat order of 415 crores. It's a company engaged in the business of water treatment, design, supply, installation and management of drinking water, wastewater, industrial water treatment and desalination. So interesting space. Skandaprasad Seetharaman, the CFO of the company, is joining us now on the show to talk about this repeat order. It's an operate and maintenance order, I believe, Mr. Seetharaman. So let's begin with the details of this 415 crore order and why you feel that it is, going to be an important pivot for the growth plans you have going ahead.
Good morning, Tamanna. Thank you for the opportunity today, and very good morning to your viewers. We have a very clear laid out strategy that we want to increase the share of our operation and maintenance business of our overall revenues. We are today at about 15-16%. We have set a medium-term target of getting it to 20%, and this order is pivotal that way in furthering this revenue stream growing. What is also more important is this is an order that we have been already executing for the past about 10-11 years. We built the plant. The plant was commissioned in 2013, and this was the first DBO model desalination plant for domestic water supply in all of India. And we have been maintaining it for the past 11 odd years. Now we have secured an order for 7 more years. That makes it an overall about 18-year life cycle. And this is also a demonstration that long-term O&Ms can be successfully maintained. And this is also a success story for desalination, both for Chennai and for WABAG.
So, let me just come to the financials before we get to the bigger picture of desalination and where you think you're going forward. If I'm looking at your Q1 numbers, it was a pretty decent quarter, margins at 13%, bump up over there from 11.9%. You're seeing those margins maintain, and even for a repeat order like this one, where you've been with that client for a while and then they have now renewed that order. What are the kind of margins you see, and what is your margin maintenance guidance for the year?
We have given a medium-term guidance. We don't do it year over year because it's a practically lumpy business. 70-80% of the business comes from EPC, but we have given a band of 13 to 15% within which we would like to maintain the EBITDAs going forward. From the last year, we have also seen revenue growth now starting with the robust order book that we have, and this is an O&M order. This is not an EPC order, and while you see the margins are blended at about 13%, the O&M margins are generally much better. We don't give a sectoral margin guidance or a project-wise margin guidance, but I can tell you this is a very profitable order, and it is much better than 13%.
Okay, just give us an idea of your new projects and what are going to be your revenue drivers. You have new projects in Chennai, in Bangladesh. Since you have work in Bangladesh right now, also give us a sense, Mr. Seetharaman, of has there been any impact due to the political turmoil that we've seen?
Let me take the Bangladesh question first. This is a World Bank and AIIB funded order. So payment securities are very clean over here. So multilateral funded orders is what we go for. So we don't see any typical risk over here. We are waiting and watching. It is too early. We have demobilized our resources while the local resources continue to chug along over there. It's the engineering and procurement phase is what the project is at, which we will continue to do from the head office. The local site works will obviously be on a wait and watch mode, but we see that being multilaterally backed, being essential services sector, this should move forward, and we'll see in the next couple of weeks. We hope that things will be much better. From a Chennai order perspective, it's going very well. The engineering is largely complete. We are in advanced stages on the engineering front. Procurement again is on full swing. We will start our supplies by end of Q4 next year. Will be a peak in terms of procurement and supplies, and also marine activities will be at full swing in the next year. Civil activities are going at very, very good pace. There is a lot of mobilization of resources because, huge amount of concreting has to be done with the size of the project. It's a 400 MLD project, and all things are on track, on time, on quality, and on budget.
Just to get a sense of, the kind of order book you're looking at, of course, your breakup is 60% rest of the world and 40% India. Do you see that continuing? Do you see more municipal orders bumping up from various states? Just give us a sense of where you see the order book growing.
From a strategy perspective, we will not go for state orders. We have repeatedly stated that we will be on orders only where there is a multilateral funding, a federal government scheme funding, or a letter of credit, sovereign guarantee, or a G2G funding. So we want to be very secure on the payment front, and we have been very successful on this. More than 98% of our orders in EPC are on this front. From an order book perspective, today we see that the existing order book is good, and we are also seeing the order pipeline to be very strong, especially in the Middle East and Africa region. India, last 9-12 months has been a little slower because of the general election phase. Now that that is passed, H2 should see some better action from an India perspective. But the last 12 months, having known that this is going to be a general election phase, we moved our resources overseas. We put in bids of over $1 billion, and we are already seeing the outcomes coming through one by one. Early on in the year, we had one order from Ras Tanura. It's about a $33 million order. We are now seeing the Chennai order coming through, and we have also stated in our earnings call, which was earlier the last week, that we are preferentially placed. We are a preferred bidder in orders of over 6,000 crores, and largely these are international in nature: desalination, wastewater treatment. So we see that the international breakup will continue to grow, and Middle East and Africa will be the growth engine, while India will remain the core market. At an overall level, we will stay within the emerging economies: India, Middle East, Africa, Southeast Asia, and CIS countries. We have completely defocused from our European business. You would have already seen that we have divested the third European subsidiary. So we are practically 0% exposure on the Western Europe, while we will continue to see that the Eastern Europe, CIS countries still need a lot of water infrastructure, and that is part of our strategy where we are putting in business development efforts. But at this point in time, India, Middle East and Africa, plus Southeast Asia is our core market.
Thank you very much for joining us today on the show. It was indeed a pleasure to get a better understanding of what's happening at WABAG. Good luck with business going ahead.